GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. It's our third one of 2021, which already feels a bit crazy. Markets have been very interesting. We've got another big week coming up. Joe Biden will be inaugurated as president in the United States, and it's the beginning of US earnings season. So that potentially could stir up a bit of volatility here. And big question we're all kind of grappling with is, has the dollar bottomed? And does that mean gold has topped? And does that mean euro dollar has topped, etc.? And of course, what's going on with Bitcoin? We've pulled back down to around 35,000, but we're not quite sure. We want to analyze now and hopefully shed a bit of light on it, whether we're going to get a bounce from here, or maybe there's a bit of a top going on in Bitcoin as well. Okay, so let's start with we've got three major Forex pairs here, as you can see on the screen. We've got the S&P 500 as far as stock indices, we've got gold, we've got oil, and we've got Bitcoin. Should mention that if there is any extra charts you want us to cover, please drop a comment in the video. We're more than happy to cover them. And if you're just enjoying the video, please click that like button. Right, so let's have a look at the euro. This is our daily candlestick chart, as you can see. Now, here's the kind of picture that I'm looking at. We're in a consolidatory range. We broke out to the top side. It's been a strong trend for a while. We've broken out, broken below this rising trend line. It's not to say that the uptrend is over. It's just one indication of the speed of the trend that has slowed down. Now, my inkling at the moment is still that we're overall in an uptrend here. This is our 200-day moving average. We're well above it in the euro dollar, but the point being, we are so well above it that we are actually due a bit of mean reversion. We're really due to kind of pull back a little bit closer to the average, because we're quite far away from it at the moment, or at least we were a week or so ago. So that's the point, and I suspect we've got a little bit further to go on this downside, but who knows for sure. You can see what's going on at the moment. We've crossed down through the 121 threshold, and we're testing this previous low. And so we've started down early as of Monday, and then we're pushing back up to the top side. One opportunity on the short side is that if we go up and test these previous lows, that is potentially an area that the price just rolls over again. It depends how we react at this 121 level. We could push up all the way to 122, but my reading of the situation is that we broke the rising trend. We didn't get much of a material bounce off 122. We fell below it. Then we tried to get back above 122 again. Only lasted a few hours, and then we're back below it again, and now we're back below 121 without much buying interest at 121. So the price feels a bit weak. There's not much buying coming in at the big round numbers, and I suspect maybe there's another leg to go on this decline, and it would sort of make sense if we were targeting down here. Now we have got the 50% retracement before that, and then we've got the 61.8% retracement of this big last rally in the euro are surrounding this line here. But you can see it kind of forms the basis of this former resistance, and then you can see 120 is what we kind of tagged and rolled over from before. So 120 always a big number as well to deal with. Maybe just a pullback to 120, maybe something a little bit deeper down to this trend here. You obviously have to manage your profit targets if you are going short, but I would have thought that a bounce up to these sets of previous lows, and failing that, maybe a bounce up to 122 in terms of opportunities to the short side. If we push back through 122, I would say all bets are off. It looks like the correction is over. That would put us back above the 200 period moving average on a 4-hourly basis, and the trend would be looking a bit more intact again. Because as I said at the start, it's still very much an uptrend overall, but it just seems like a bit more mean reversion is due. So that's how you got to approach this. If you are taking this to the short side, keep in mind this overall trend has been up for a while, but the fact that it's been up for a while is maybe a reason why it can pull back a little bit further, because it's just been going up for a while. So let's switch over to the pound. Bit of a kind of clearer pattern insofar as it looks like we maybe have a double top here at 137, double top backed up by a bearish engulfing candlestick. You can see that we tried to pop up through 136 as of today, and we're rolling over from 136. So it looks a little bit top heavy here in the pound, and similar situation. Trend very much has been higher really since the lows in March. And that obviously feeds into that overall question that we're asking, is this dollar downtrend that's been going on since March, is that at least due? We've had some periodic times of dollar strength, pound weakness, euro weakness, etc. So are we due another one of those? You're going counter trend, but we're just looking at what's in front of us here, and it looks like maybe a little bit top heavy. I mean, there have been other instances as well. You can't be constantly searching for a top. Equally here was an attempted double top, bearish engulfing, and then it just never materialized. We made new highs, but only just above. So here was our first attempt at a double top, didn't work out. Now we're up at 137 and we're trying to do the same sort of thing again. So it does sort of feel like it's trying to carve out a top here. It's not the most clear pattern, but to me a move through 135 kind of matches the neckline. If you were to call the neckline between these two heads here, these two parts of the double top, and it's also the big round number of 135. So that could be a key threshold to look out for to decide whether you want to be long or short. And it's also this previous high through here. So on a kind of longer term basis, if you're looking at a sort of weekly chart, you would start questioning, here's the breakout that we had through these previous two peaks, breakout, and then if we roll back through it, you start questioning whether it's even a legit breakout. So what's the conclusion here? Well, it looks like we're potentially heading south, and it's a similar situation here. If you look on the 4-hourly chart, you've actually got a kind of cleaner neckline. You can see we've already slightly tagged it once and rolled over from it, so I'm not sure if you get a second bite at the apple. I wouldn't chase this. In terms of the height of this pattern is not very high, so if you're projecting the height of the pattern down, we're not far off it already. We're already a bit late talking about this. It's already reaching kind of the objective here. Maybe it reaches the objective and you get another chance to sell short either at the neckline or somewhere a bit higher up and it rolls over. But again, it just feels like the trend is up, but it feels like things are kind of rolling over a little bit here, and there have been a few things changing as far as the dollar goes. If you check out the team's weekly video, we talk about it a little bit more there as far as the week ahead. Let's jump gears to dollar yen, and yes, it's the same. We've had the channel drawn in. More recently, we've switched it to a wedge, which would make it a little bit more bullish. With a series of peaks through here, I think this is really what we want to take out to confirm that we're looking a bit more bullish here. This is not as oversold because this downtrend has been very kind of jarring, just kind of gradual, easy downtrend. But we're still, still been a while since we hit the, it was May when we last hit the 200-day moving average in dollar yen. So nothing to say we can't just get a pop out of this wedge, tag 106 around the 200-day moving average. It's also a major area of previous support and resistance, and maybe that's it. And maybe the dollar downtrend resumes from there, but it does seem like we're overdue a bounce, and to boot. Again, something we mentioned in the week ahead video is that this falling wedge pattern is potentially bullish. So that's the end of the Forex section here. Something I probably should mention as far as events this week, again, it's all mentioned in the week ahead video, is that we have the ECB meeting and the BOJ and the BOC all meeting this week, and we have that Joe Biden inauguration, which potentially could cause a bit of volatility in FX markets depending on how that's perceived. Right, let's move over to the stock market. Very much an uptrend still. We did tag record highs briefly last week, but on Friday we got a little bit of a dip. This is the daily chart, and you can see we basically just came down 50 points or so from 80 down to 3750. It's we've got a shortened week this week in the US because of the Martin Luther King holiday. But basically the reading here so far is that we're still very much in our uptrend. Last week we had a trend line, I believe, drawn in something. Maybe it was it that low? So a few trend lines you can draw through here, but you can see we're just in a kind of steady uptrend. So even if we've got to pull back to 3700, we still just be in this very narrow uptrend. My source of concern perhaps comes from the idea that when you've had a powerful kind of rally like this, then you can have the pullback and you can kind of keep going. But it's when you've had this prolonged meandering uptrend, that's actually how we kind of started the year, was this kind of meandering uptrend through the start of 2020, where it was just a slow, consistent uptrend. And then we sold off obviously very heavily in late February and March. So the way we're starting this year, this kind of slow burn, market keeps trending higher, is actually sort of similar to the way we started last year. And so the potential is certainly there for another kind of jolt downwards, whatever might cause that. Obviously we can't predict in advance, but it could. So I think for now what it needs to be is a kind of cautiously bullish approach to the stock market, with in mind that we are still trending pretty neatly higher. We're only just off the record highs. There's certainly no need to get bearish at this stage. And I think I've been making similar comments for the past few weeks, which have proven to be pretty decent as far as an approach. Just with the idea that at the moment these dips are still working. We've had fairly steady dips within this channel, so just keep an eye on the channel. If we break below it, probably below 3700 would be the one to watch at the moment. That's when we start getting cautious. And then the big line of the sand, I think, is probably 3600, where you can see we kind of topped out previously last summer. It took us a while in the lead up to the US election to get through it, and then we've been breaking out above it since. And maybe we've already had one test of it, but maybe we're due a second. Okay, let's move over to gold, good old XAU. So my view here, just looking at this weekly chart, is this does look pretty worrisome for gold. I said that after the week before last. It's bearish. The follow through last week was a bit soft, which to me suggests this week we've got some scope for a bounce, and we've already seen a bit of a sign of that from the 1800 level. So how much of a bounce? Well, it could come all the way up to 1900, because that's pretty much where when we had this kind of test of the low, and then we closed, where we opened the week 2 weeks ago, forming this entire wick up here. That opening level around 1900 I think is potentially critical. Maybe bears, they aren't prepared to push the price back lower in gold until we get a retest of 1900. So and you can see here when we had that first bearish impulse, we kind of bounced off 1900, and then we saw that big rollover through it. Today we've come down to test 1800, getting a bounce. Maybe this bounce peters out and we move through 1800. I think a close for the day below 1800, and that's a pretty bearish sign. And then you've got this this critical low through here, which happened to be this previous peak through here. So gold, it's looking soft to me still. Like I said this last week, I'm bullish overall, but I think after that big sell-off the previous week, I think there's probably more downside to go. But what I'm saying now is, after we didn't really get some big heavy selling the following week after this big bearish move, so maybe we get a bullish tag of this declining trend line, maybe 1900, before resuming a bit more downside. And I would have thought that we need to test this previous low at the least, even if bulls are going to take charge again down at 1760, we at least need to test the metal first. So it's sideways trading in gold is a little bit tricky. We're down, near kind of 2-week lows. We had the lowest close for gold in a month. So we're a bit oversold. So, on the short-term basis, there is some chances to buy here. It's not altogether a wrong option depending on your time frame. The kind of swing trading time frame that I work on tends to me suggest that we've got a bit of a bounce and potentially another rollover, because this is quite bearish. Okay, moving on to oil. Another very bullish looking chart. Nothing really to indicate that this bullish trend is rolling over, other than the fact that it just looks very extended. I don't know what I think this is. If I look at okay, this is that's a 50, but if we have a look at our 200-day moving average, again, you can just see we're well above our 200-day moving average. Now, we've been above it for a while. I mean, look at this little peak here. We pulled back for a couple of days and we rallied up to new highs. So just the fact that we're well above the 200-day moving average doesn't mean the trend is about to reverse, but it's definitely one factor to consider. We are basically technically overbought. We're too far from the average. At some point we have to correct back down towards the average, because that's where the price spends most of its time, near the average. So to me, this trend seems like it's a bit overdone, and we need a bit of a pullback here. And presumably it's going to be a test either of this previous peak here, just under 50, which is what I said last week too, or it's going to be closer to the bottom of this kind of grinding uptrend here, which will be closer to 45. So I don't think there's any need to get very bearish in gold after one bearish engulfing candlestick, but it does to me set up potentially an interesting bearish reversal here from an overbought condition. So again, on a daily basis, this is a bearish engulfing candle from last week, and the price is very overbought. So potentially a counter trend opportunity here in oil, just because again it's so heavily overbought. Bear in mind, something like this can certainly happen, where you think the trend is reversing, but it really doesn't. It just carries on. In fact, it accelerates. And we do have this was quite a big moment when, if I put up the weekly chart, these previous lows through here, the fact we were able to kind of blast through it, we could just get a test of those and a rally further. But interestingly, you can see that we've just tagged the 200-week moving average. The 200-week moving average came in just below, I believe. Whoop. You see the point anyway. This previous high through here. The previous high through here, 200-week moving average, potentially a reason that the market pulls back a little bit in the short term from this very extended uptrend. Okay, last but not least, Bitcoin. We're straight down into the 4-hour candlestick chart here, just because this trend has been so prolific. It's just crazy to look at the weekly chart. I mean, the weekly chart is informative in that obviously this price move has been absolutely parabolic. If you look at the March low down near 4,000, and the fact that we've gone up to 40,000, I mean, that just tells you it's a very bullish market. And for it to pull back from 40,000 even down to 30,000, which it's done, even down to 20,000, okay, so it would get cut in half. But how do you compare that to it going up 10 times from its March low? So for a very bullish market like this to pull back, it's not even anything crazy to suggest. So what are we dealing with at the moment? Well, we had a very very fast uptrend. We had a big sharp pullback, and so now, having had that pullback, it's kind of slowed down the pace of this uptrend now. So now we're kind of underneath, above rather, this kind of rising trend line. We've held up at 35,000. I suspect we're probably just going to be in a period of chop. So I don't necessarily think this rising trend line is going to hold. It's just kind of interesting to show how the kind of, if you like, the speed of the trend went from something like this to that. So it tells us that the momentum is giving up. And to me, I think probably most likely is that for a little while at least, you know, the trading range in Bitcoin, you know, becomes something more like this. We'll probably break through those lows, but people buy the dip before the before their kind of uptrend really reverses, but they probably sell the highs as well. I think we'll do a bit of a chop in Bitcoin after such a prolific rally. People did buy into this dip, but they weren't confident enough to take it through 40,000. I suspect they'll sell it off, but also sellers won't be confident enough to really drive it much below 30,000 either. But let's see. As I said, we've gone up 10 times in 10 months-ish. So, you know, certainly could go deeper. 50% pullbacks, again, a move down to 20,000. That's certainly possible, but no indication of it yet. Okay, that's us for this week. Thank you very much for watching, everyone. Really appreciate you joining. And if you do like these and you want to make sure you don't miss next week's video, make sure to subscribe to the channel.